So I want to do a quick breakdown of the short that I took and why I took it. Um, so a lot of watching like a lower time frame price action and waiting to tell me that it was like a good bet, basically to go short. 'Cause that's all we're doing. What is that? What is like a good bet? You know? All right. So the higher time frame slightly, we had an idea. Okay, we know we want to like fill in this gap, but at the time that I came to the charts, around 3 o'clock, so 15 minutes later. Um, we had like YM had filled in the gap. The other two assets hadn't. So the question now is, okay, are we gonna like continue up here in this final hour of trading, or are we just gonna do a retracement against like the daily range because the daily range has been up. So first thing I do is like I draw quadrants as teaches quadrants of this huge gap. You know, you need to have quadrants when you have a big gap just to help give you narrative around these levels and how price is reacting to them. I mean, look at so this was a beautiful draw right here. Like my initial idea was if to go short, this was like the final draw because we have a big like breakaway gap on like all the assets you see, and it's like equal lows in here. Um, but anyways, look how price reacts around like these quadrants. You know, that's nice. This is like the midpoint of the whole new week opening gap. And then this is the upper quadrant, you know, stuff like that. So first off, we had S&T at these highs in here. And then the 3 o'clock hour opens. How can I do this so we can understand? All right, 3 o'clock hour opens. Screw it. So we have the quadrants. 3 o'clock hour opens. And this is the 3 o'clock hour open. This is like the, you know, the macro. So first thing I notice is like, okay, we have the SMT at these highs, 15-minute SMT, and we have a 5-minute breaker right here. So this is like a big 5-minute breaker. Wow, look at that. So we have that, you know, and we have the 5-minute breaker right here. And then we have, you know, the macro 3 o'clock opens and gives a wick up and then like a dump down. So it's basically like, okay, if the hourly candle is going to manipulate to the up, manipulate in one direction and go down, if it's going to give a wick, basically, this can very well be its wick because we opened up and then we dumped. Okay, so that's viable for it to be a wick. Now, the other thing that what was so important about this being going up right here is look, it's perfectly OTE. This comes OTE, perfect, and then dumps. So we have the 3 o'clock open hitting OTE of this little tiny breaker for whoever is like smart enough to take that. Perfect, stops on the dot. And then we get the dump down below 3 o'clock open, below the swing low. And then this, the 5-minute breaker, also you could say it's a 1-minute breaker, getting tagged inside the macro. So however you want to look at that, it's fine. But this logic is really important. OTE above 3 o'clock and then dump below. Now the break. So we have the fair value gap. So at this point, I'm like, okay, 5-minute breaker. I'm gonna draw projections off of that, and I'm gonna watch how price reacts along these quadrant levels. And we have 130 opening price. We have 130 opening price right at like the CE of this big new week opening gap. And this is 2, 2.5, and 4, which is like the final target down here for that 5-minute swing, breaker swing. But either way, let's look at this. OT above 3 o'clock, dump, get in this fair value gap or just inside this breaker, however you want to do it. So I got in like right here, like a little bit lower than the fair value gap because I was like, okay, this thing is going to be the breaker and we're going to go. The macro is finishing. OTE was the manipulation up, and nothing else. Now let's go, and let's go, basically. Um, Now where I had my stop, this is the part that I wanted to like really. I mean those things are important, but then this is also very important too because okay, so everything basically look at time for example. This is time. I want to show you what time in this example means to me. Time means this. The macro's finished. We've spent a lot of time up here. We hit OTE above 3 o'clock and then dump below 3 o'clock, and now we're creating fair value gap. So like a lot of time has been spent up here. Now, if it's really time to go, the macro has played out. If it's really time to go, wouldn't you want this to be a breakaway gap? You would want this to be a breakaway gap to give it speed. That's what you would want. You have two fair value gaps. You'd at least want this to be a breakaway gap. If you look closely, it's a volume imbalance and fair value gap. Putting a stop right here, that's what you would want. That's what I would want at least. I'd want this to stay open because it's two PD arrays in here. So stop goes here right at 3 o'clock opening price. And I got in like right here. Look how close it goes. At here, I was like, okay. And that's the other thing. It's like, okay, if I get stopped out, that's fine. It's like it was literally like 3.5 points. If I had gotten at the actual like for value gap, been two. Okay, 3.5 points for me. So I'm like, okay, who cares? If we close above this, oops. If we close above this up close candle, anyways. Goddamn, sorry about this, Greg. If we close above this up close candle, anyways, like actually like close like above the swing high of it, then that would look like a breaker to go to the upside. And okay, the short was invalidated. It's wrong anyways. I'm gonna try to look for like basically to invert this and like run up to the highs, which was like you have standard deviations off that breaker, and like this is the high of the New Week opening gap. So I was like, okay, if we run above, I'm in the trade already, but if we close above this and use it as an inversion, well, I'm gonna long this thing up to here. But no, we didn't. It was just the final manipulation. Using that as a breakaway gap to then go lower. So targets, this was like 2 p.m. low. This is 1 o'clock low at the CE. So 4 standard deviations of this tiny 1-minute breaker was my first partial because it also lined up with some other crap I can't even remember. But it was basically like, I don't know what the hell it was, to be honest with you. This video is already getting too long. I want it to be very simple because I already said the most important shit. So, I just want to check real quick because I know there's a few confluences with this. 4 standard deviations seemed like a good thing. I cannot even tell you why. I knew it was more than just 4. It was more than just that. I think I maybe I think it was we had so this was the range I was working with, and this is our dealing range right here. This little range, intraday dealing range. So that's what it was. So that we had like equilibrium right here. We had 4 standard deviations. We had a big gap, like a discount. Like this is like a gap, at equilibrium. So I just felt like that was enough things lined up to put a partial. I mean, that was a perfect spot. It like ticked it and then like went back up, and I was like, well, at least I got my partial. What ended up doing was it came down to like whatever. You understand what happened. 130 opening price holds it, which also happens to be CE of the Newegg opening gap. And ICT talks about this 2024, and he's still using it a lot. So you have the first fair value gaps of the opening range every day, but the ones that occur on Monday, those are the ones that he says leave on the charts. The first fair value gaps that occur on every Monday, you want to leave in your charts, at least for several weeks, because they're the most powerful ones or something like that. Kind of like an end dog and stuff like that. But look at this. So we have 130 opening price, C of the New Week opening gap, and a first fair value gap from last Monday. Not today, but the Monday prior. I mean, boom, stops it. So when you have like a lot of confluences like that, I think it can help. Of course, you can have a lot of lines in your chart that can like mess things up and confuse you and whatnot, but things like this kind of just help me. And so the final draw never got hit, and we were approaching that time of the day where it was after 4 o'clock, and I moved my stop down to basically like here or something, and because like 350 came in and it gave the manipulation and the dump down, so I was like, okay, if this thing is going to continue down to my draw, why would it need to go back up above the 350 like manipulation? So I moved it down to here, and it came in and then dumped and pumped anyway. So it's perfect. That's all. Sorry about the length of time, and that's it.